2025 has been one of the biggest years for blockchain to be spotlighted. The technology behind crypto has now kind of surfaced all the way up to mainstream media attention levels. And I think that while we do start to see that, I think the most important thing to focus on is what the biggest players around our traditional financial system are also doing at this time. Earlier this year, we did see from NASDAQ, which is one of the biggest players in TradFi, how they were moving to 24/5. Now, they made this announcement. This goes all the way back to March of this year. I kind of went, behind the scenes because during that time, the market was selling off in a huge way and nobody really cared about what was happening. But the main thing that we're looking at is how legacy players in the TradFi space are now starting to shift into a 24/5 environment. Eventually, it will be a 24/7 environment, but the thing that we look at here is how are they accomplishing this without tapping into blockchain or crypto? And that's exactly where we're really kind of starting to see the big picture form, is they need this new technology. They need crypto. They need blockchain. And what's funny about this is the NASDAQ recently gave us an update on this, going back to August of this year. And we have here, trading costs skyrocket when exchanges are closed. NASDAQ is helping lead the charge towards 24-hour, 5 days a week trading, and investors stand to benefit. With the current limited trading day, studies show that off-hour trading costs are 3 to 6 times greater than during regular trading hours. So again, they're still focused on this. Now, we do know that this is going to happen in 2026. We know that the NASDAQ is fully focused on 2026, shifting to 24/5 trading. However, how are they doing this? Well, we have been talking about a few connections between the NASDAQ and key players like even Ripple, and I think that this is where we start to see the major connections form. Now, let's go back to September real quick before we talk about the connections to Ripple, because in September, we not only heard from NASDAQ, but we also heard from the DTCC that they were changing to 24/5 trading. In this interview with NASDAQ, they discussed the evolution and transformation of financial market structure from T+1 to 24/5 trading and digital assets. Because again, the only way to achieve 24/5 is by tapping into digital asset technology. And even NASDAQ is aware of this. NASDAQ was recently at Ripple Swell, and this got posted from NASDAQ. The digital asset ecosystem is at an inflection point. NASDAQ Chair and CEO Adena Friedman recently joined Ripple President Monica Long at Ripple Swell 2025 for a discussion on unlocking the potential of the digital asset ecosystem to enhance the global financial system. What I find crazy about this, is that we have the official NASDAQ account posting an image from Ripple Swell where the CEO and chair of NASDAQ is sitting right next to the president of Ripple. And this is Adena Friedman on modernizing the future of global finance, unlocking the potential of digital assets to enhance the global financial system. So there we have the insight of how NASDAQ is achieving 24/5 trading. They're tapping into digital asset technology and digital assets themselves. Now, what I find funny about this is we know Ripple has been locked in on major acquisitions, building out the Internet of Value, which is exactly what this is in terms of the 24/5 shift. Now, obviously, the Internet of Value will be 24/7, but it's changing the way that money moves around the world. And that could be even, stocks, how stocks trade, how real estate trades. All of this is through stablecoin initiatives and even DLT. Now, if we go back just a little bit ago to November 30th, we did see NASDAQ makes tokenized stocks a top priority. NASDAQ's crypto chief says they're moving as fast as they can to get SEC approval for trading tokenized stocks. This would allow investors to trade tokenized shares of publicly listed companies directly on NASDAQ. And by the way, here we have Adina Friedman back in September saying that NASDAQ filed with the US SEC to tokenize stocks. This is massive. Listen closely. You want to tell people what?
You think we should?
Yeah.
Okay. So, so this morning we announced that we're going to be bringing tokenization into our markets. So making sure that equities are tokenized and traded on market, in the markets, not in a side sleeve, but actually in the core markets.
So the eventual goal, or is it today? 24/7, 365 equities, just let it rip constantly.
I mean, I think we are all moving in that direction. We announced several months ago that we're moving to 24/5. So we're
24/5
moving that way.
So Saturday, Sunday,
Not for equities yet. I think that, we have to, we're walking before we run. But I think that getting to 24/5 is a major advancement for the U.S. equities markets. And then on top of that, now with tokenization, if we can introduce that also into the markets, it allows us to really think about streamlining the post-trade processing, bringing and modernizing elements of the markets that have a lot of friction. We are hyper resilient and we're hyper scaled. We manage, like today, we had 95 billion messages come into our systems today, and we had a median, return time of 20 microseconds from order to trade. We handle like 3 million messages a second. It's hugely scaled. But then at the same time, once that trade occurs, there's a different process. And then the post-trade process, as we know, is an area where tokenization really shines. And really cutting down the friction, managing capital flows across the global ecosystem, and really bringing that capability into the market is going to be the next.
Sure, your reaction to this. There's this very famous curve, which is like you get this early font of insanity, and then there's the trough of disillusionment, and then you grow through. And does it seem like crypto is actually in blockchain? It's finally real. It's like there's real companies doing real things, stable coins, what Sachs did with the Genius Act.
Well, I actually want to point to that because, honestly, having regulators who want to work on bringing it into the mainstream and want to create the rules of the road is such a refreshing thing, because I think that it allows us all to understand how we can operate within a world where there are tenets of investor protection. The technology is going to have things we can and can't do, but also being forward-thinking and forward-leaning and how the technology is going to be applied is going to be critical. So we're very excited about the fact that we finally have this convergence of regulation between the traditional markets, the digital markets. How do we bring it all together to, frankly, advance all markets? And we're very, very excited about that.
Now, obviously, with what, the NASDAQ is saying here, Adina Friedman is saying, hey, with regulatory changes and things happening, yeah, we're starting to see the shift towards tokenizing stocks, tokenizing things, bringing everything on chain. And even going back to November 30th, we're starting to see them make this a top priority. But why wouldn't they? Right? We're seeing regulations becoming a reality. We're starting to see legislation getting passed around the world. We are in the evolution of our entire financial system right now. But what about the DTCC? Because again, if you go and look back at the title of this video, and if you think about what we just talked about going all the way back here to September 9th, it's not just the NASDAQ that's looking into tokenizing and tapping into digital assets. It's also the DTCC. In fact, the DTCC has been tapping into digital-based technology for quite some time. And just recently, we got this big update from the DTCC. The shift to 24/5 trading. The shift to 24/5 trading, what it means for U.S. equity markets. Welcome to the latest edition of the DTCC Connection. Get connected to the news and insights impacting the global financial landscape. The shift to 24/5 trading. This is from the DTCC and Ernst & Young. So if we are looking into this, we have a new report from the DTCC alongside Ernst & Young, details the industry's transition towards near continuous trading, the operational and risk implications, and the strategic considerations for market participants in preparation for the change. Key findings from the survey include the projected impact of volumes, expected areas of complexity, and more. Unlocking opportunity with TradFi and DeFi. At CBOS 2025, DTCC's Brian Steele joined a panel discussion on a collaboration between traditional and decentralized finance, as the industry balances replicating the trust levels of TradFi with the massive opportunities of DeFi. Collaboration between the two worlds is essential to unlocking new efficiencies, expand access to capital, and build a more inclusive financial ecosystem. And 5 things to know, challenges and opportunities for T+1 in Europe. So again, they just kind of break this down. Obviously, this isn't really that important, but the main thing that we're looking at here is the fact that the DTCC is fully embracing this technology in a huge way to close the gap between TradFi and DeFi. And looking into the report we do have over here, that this is revealing up to a 10% of total equity volume projected to be trading during overnight sessions by 2028. Now, the key findings are by 2028, 1 to 10% of total equity volume is projected to be traded during the overnight sessions, boosting global market access. On top of that, retail and institutional participation, retail investors are expected to initially drive overnight trading, with institutional participation assumed to rise during market stress and as infrastructure develops. Over half of the survey respondents foresee greater institutional activity in volatile periods, market harmonization and safeguards, pretty straightforward, risk margin and liquidity as well. But the main thing that we're looking at here is, how are they achieving this? How are they doing this? Well, 24/5 is capable of being done with traditional-based systems if they start to integrate digital-based processes. However, the next step here is 24/7. And the only way that they're going to do that is by tapping into blockchain completely. But I still think that even with 24/5, they're going to tap into DLT. Why? Well, because we know from the NASDAQ, and even going off of this image, digital assets are playing a key role here. Stablecoin initiatives will most likely play a key role as well. But also, what's interesting about the DTCC is what happened earlier this year. What am I talking about? Well, if we go over here to April 30th from Genfinity, DTCC's master plan tokenizing quadrillions in global assets with centralized control. DTCC moves 3.7 quadrillion annually and just patented a system to bring all assets on chain. And yes, they did. The patent shows interoperability across public blockchains, build private and consortium DLTs, manage rights dynamically, delegate wallets, prepare for quantum security threats as well. And this is from the DTCC regarding how blockchain technology is transforming transactions, powering exchanges of cash, equities, and physical assets on a single platform. Again, over here, we do have up to 10% of total equity volume projected to be traded during overnight sessions. Here we have from the DTCC themselves talking about how blockchain technology is transforming transactions from, cash, equities, physical assets, etc. Equities is the key focus here. This is how stocks and everything around us in terms of financial products move on chain through blockchain. Now, of course, with the DTCC, right, they're an absolute giant. We've talked about them many times over in the past. They're moving $3.7 quadrillion worth of securities in a year. Every single day, they process more than 100 million transactions worth about 1.2 trillion every single day. They are an absolute giant. Now, the reason why this patent is so crucial is because it obviously puts a spotlight on DLT, but it also names specific DLTs. And here we have them. Implementations of distributed ledger and or blockchain technology, including but not limited to Bitcoin, Ethereum, Hashgraph, Binance, Flow, Tron, Tezos, Cosmos, and Ripple are compatible with the present invention. We have here DTCC's patent showcases an architecture that can plug into or bridge across any major blockchain and DLT environment, but with institutional custody models, delegated authority, centralized registries as well. And it's compatible with a multi-chain view. Bitcoin, Adara, Binance, Flow, Tron, Tezos, Cosmos, Ripple, and of course with the XRP ledger. This is where we see the big picture here. Our entire financial system is changing. The biggest names behind it are here. But what the DTCC just launched, this is so big for blockchain because we know that the DTCC is looking into blockchain to move equities. This 24/5 trading is all based around the equity markets. And the NASDAQ is already proving to us exactly how they're going to do this. They're going to tokenize stocks. They're going to tokenize equities. Then they're going to shift digital assets into overdrive by tapping into stablecoin initiatives on these DLT ledgers. Guys, we are watching as the biggest legacy TradFi giants are moving into the digital asset space. And I don't think that people realize just how bullish this is. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, this has been Nick. Thanks for watching. Peace out.